Hey traders, hopefully you're having a good day. Welcome to a global macro update. First thing we want to discuss is this news story headline: WHO reports largest single day increase in COVID cases yet today. These NASDAQ hit all-time highs. It broke the all-time high, and now we're really soaring in the skies here and not really caring what the social unrest and the increasing COVID cases are doing to the overall economy and population. The stock market is even further detached from the overall economy. So before we get into the charts, we do want to look at some economic data that did come out. GBP, the currency, did have a little bit of a bump up. It had a pretty big dump down after they said that they were going to print more of their currency and devalue it a little bit more. A little bit odd because Europe and the euro did the same thing. They said that they're going to try to stimulate the economy more, and then the euro actually strengthened and gained and appreciated over a lot of other currencies. But then if you're looking at GBP, they basically came out and said the same thing, and it plummeted and fell quite a bit. So it's a little bit, you got to look at the price action rather than the news for sure, especially in this market. So we did get some positive news for GBP. So the currency is up a little bit from the lows that it had around 2 days ago. And then we did get a little bit of positive news for the US with some increasing new home sales and higher than the actual forecasted amount. Like I said before, the GDP for this upcoming Thursday is going to be pretty important. They do forecast it as a contraction of -5%, as the same as the previous, but we will see on Thursday. Initial job loss claims has not really impacted the market that much, if at all. So the main thing we're going to be looking at is the GDP numbers for the US, and then we got a little bit of interest rate decisions. They're going to look like they're going to keep it the same, with the forecast is the same as the previous. So we'll see what that comes out to be. So the first thing we're going to be looking at for today is the DXY, which is the US dollar index. It's comprised mainly of the euro, so this is somewhat inverse euro USD for the most part. There's also GBP, there is also other major and minor currencies, but a large percentage of it is going to be the euro. So when we are looking at it from the monthly time frame, conducting our top-down analysis, we first see that we do have these nice bottoms here where we have a symmetrical triangle. You got to push up, a pullback validating the previous resistance as a new level of support, and then you get a strong impulsive move to the upside. And then you also see the same thing occur. And then this was the basically .com boom right there, where the dollar strengthened, and then you get the bust. And then this was 2014, 2015, and then around 2008, there was a huge sell-off right here in the US dollar. But overall, we're going to discuss what's currently happening right now, not really discussing too much in the past, trying to make these videos a little bit shorter. So what do we see right now? Let's get our snip and discuss what we currently see within the market. So let's go like this and also change it to white so we are able to see a little bit more clear. So first off, the main key horizontal levels that we're going to be looking at is around the 120 range, the 102, 103 range, and then we also have two mid ranges at 93 and 88 or 89, and then our main level of support at around 80. And these are going to be the horizontal zones that we're going to be looking at in terms of the large time frames. But for trend lines, we got a series of lower highs. This is a high, lower high, and then you got a lower high with a long wick to the upside, with it really rejecting right back down. A lot of sell pressure around that zone, indicating a yet again lower high that we are respecting. On the upside, we do see that there are higher lows, so we are getting a squeeze in price. We see our first anchor point, which is where the trend line starts and initiates, and then you get a higher low, higher low. You have three higher lows. In my opinion, once you have two higher lows, you can then add a potential trend line. You don't verify it, and you're not able to use it as a valid trend line until you get the third touch. Once you get a third touch, we use either A or B touches in order to validate our trend lines. If you'd like to know more, you can look at previous videos, and then once you see that third touch, then we can say, yes, this is a valid trend line that we can use within our structure. So what do we see when we add them together? We see a descending zone connecting the lower highs, and we see an ascending zone connect the higher lows, and we see a nice squeeze that's occurring within the US dollar index on a monthly chart. This is a large time scale, so obviously there's a lot that could occur before we actually get to the apex, which is at the very end of the funnel. Obviously, with a descending and ascending zone, there is an end, there is a center. You have to either exit either to the upside or to the downside. And usually the fundamentals play in it as well. In terms of just my opinion, I do think that the dollar milkshake theory could come into fruition, meaning that we could break up to the upside, meaning that there's more demand for the US dollar, and this is mainly because of the US dollar denoted debt that is around the world for countries as well as corporations. And there's a lot of debt, they need to pay it back, and if the US dollar increases in value, people are going to pay back that debt quicker because it incurs interest, and if they are not living in the United States and using US dollars normally, then their native currency is most likely going down unless they are living in Japan. Basically, if there is a major risk-off sentiment, and if there is something like we had in March, if there is a lot of worry, fear, uncertainty in the markets, US dollar and Japanese yen will appreciate and be relatively stronger compared to almost every other currency that is in circulation in the world, basically. So if there is uncertainty, that debt is going to increase for people who are not living in the United States, which then creates a possible outcome in which the dollar milkshake theory could come into fruition. So in a world of uncertainty, that could be the outcome. In a world of steady increases, stock market increasing, everything's fine and dandy, then you could see dollar weakness continue, and then there won't really be any worry of paying back debts, and there won't really be much demand for the US dollar, and people probably borrow more, because if you're borrowing something that is devaluing in value, you don't have to pay back as much in your native currency. So we'll now go into the smaller time frames. We've discussed the large time frame squeeze that's occurring, and we're now going to go into the daily chart, and we can see this is a sneak. Actually, we should go to the weekly, probably. We should go one by one. But we can see this huge move to the upside here. That was the liquidation event. That was when the stock market, gold, crypto, oil, almost everything sold off, and the only thing that was really appreciating was the US dollar. Even the Japanese yen was going down compared to the US dollar. Everyone was trying to get into the dollar when there was major uncertainty in the global markets. So that is, in my opinion, an indication that if there is another uncertain time where there's going to be major worry of overall stock market sell-offs globally, you will get a rush into the greenback, which is the US dollar, right? So that's going to be the speculation, and that's going to be the dollar milkshake theory speculation that Brent Johnson is anticipating in order for his trade and his overall thesis to work and be profitable. We'll see how it goes. I'm not much of an investor. I would definitely classify myself as a trader, so I'm more nimble, but that is a global macro possible outcome that I think could be a play and could be a good trade idea. But in terms of the weekly, we are still holding our support zone at around 96. We did have a symmetrical triangle squeeze to the downside, which did hit the target that you create from the size of the symmetrical triangle opening. So we are right at a key level of support. We can see if we just take a picture now of the weekly chart, we're now at a major level of support that we're able to hold multiple times all the way at the start of really 2019. We're able to hold these series of supports here, even with the huge sell-off and then the big spike down, big spike up, we were able to hold this strong level of support, and now it looks like we're at this zone again. Doesn't mean that it's going to hold forever, but if we do break this zone, that's going to be a pretty significant level because we haven't really seen the price go beyond this zone and hold on the weekly chart since really the start of 2019, which has been quite a long time. So if it does go down that zone, that's a pretty important break within the chart structurally speaking. And then the next major zone that we are going to be looking at is around the $93 zone, and that's going to be in confluence with the higher lows that we're seeing on the monthly chart. So there is a confluence between a horizontal zone and an ascending zone, creating a key level of demand where we're going to get some level of reaction if the price gets to that zone. And just a firm reminder, major levels where there's going to be a lot of intersections not only repel the price, but they also bring the price closer to the zone, because if we're right next to it, if you're a buyer, why would you put a buy entry a little bit further up when you know that the zone is going to be just a little bit further down, and you can reduce your risk and increase your position size, get that risk reward higher? It just makes more sense. So they also attract the price in theory as well, if you look at it from kind of a trading perspective and a trading standpoint. So that's going to be the main zone that we're going to be looking for, which means that there's going to be a possible continuation of momentum from the break of the support, if it does hold, into the key level of demand, which is going to be, in terms of the overall market, a risk on environment. Stocks and crypto and gold and silver are probably going to be doing pretty well because they're all pegged and paired, not pegged, they're all paired with the US dollar. And if one thing is absolutely stable and another thing is going down, the thing that is stable is going to increase in the units of whatever currency you're valuing at, which is the US dollar. And if that's going down, everything is going to be going up in relative to this going down. In theory, if we do get the dollar milkshake theory and the US dollar increases in value, it's going to be harder for things like gold, crypto, stocks to go up in value, although that's the opposite way, because of the fact that there's opposing forces where the other side of the pair is also going up. So it has to go up greater than the US dollar. And it's not like currencies are absolutely stable. Obviously, they're not nearly as volatile as stocks, crypto especially, but they still do move in value. Like the move that we had in the DXY from the high of the triangle, if we do zoom into a smaller time frame, we can see that a little bit more clearly. And let's just draw in this squeeze that occurred right here. And then we do see a series of lower highs as well. You know, from the break of the squeeze, we got our move around 2.4%. That doesn't seem like a tremendous amount, but that's not a significant move. But if we look at some big moves that occurred here, 7.7, that's a large move in currencies, and sometimes they can move over 10%, right? So you definitely got to look and understand and try to understand what's happening on the other side of the trade. If you are trading BTC, gold, silver, whatever you are trading, if it's paired with the US dollar, even equities, I think it is pretty important to understand what is happening on the US dollar. So we got a massive slam down. We did get a bull rally, and we are getting a pretty significant move back down, continuing the momentum to the downside, retesting this strong level of support at around 96. Let's go into the 4-hour chart and see this ascending, looks like wedge that did break to the downside. We've got a nice ascending trend line that's connecting the higher lows, and we also see a ascending wedge, if we go like this, connecting the less higher highs, so it's weakening and it's rolling over. And then once you break the recent low right here, or you can go right here, that's going to be a place, well, we didn't enter it, but that would be the structure that you're looking for. And then once you see a possible type A or type B candle closure, validating the previous support as a new level of resistance past the zone of confluence, we have the ascending zone in confluence with the horizontal zone. That's going to be where you're going to be looking for your stop entry order, just below the candle closure of the previous candle, stop loss just above the previous high, and you're looking for the opening for your nice take profit levels as a first level take profit. So that's going to be the structure that I'd be looking for if you are trading, but we're just looking at the DXY to understand what is happening within the US dollar. So right now, it does look like we are carrying our momentum back to the downside, and we're just trying to understand where the next possible zone of support is going to be and where a possible take profit is going to be. So if we're just using geometry, the next possible obvious zone of confluence for support in line with the geometry as well as previous historic price action is going to be around 96. So we'll see if we'll double bottom. We'll probably get some level of a descending zone like so. And if we're going to hold that zone for resistance, we'll be creating a descending triangle. And then if we're going to break this $96 area for a strong level of support break to the downside, that will be the confirmation that we're going to continue the momentum to the downside for the US dollar. And then we'd be looking for potential gold longs. It does look absolutely great. Silver looks really good as well. Overall, I think that will be a situation where it is a risk on sentiment. So stocks will be doing well. Crypto will probably be doing well to some degree. So that's going to be the environment in which you're going to be looking to long things that are more speculative. So we'll see how it goes. Right now, we are nearing a level of pretty significant demand of DXY. But as of right now, the momentum is to the downside. The sentiment is to the downside for the US dollar. And we might get a bounce, but overall, we're making significant lower lows and lower highs. And I don't want to really go beyond anything under the 4-hour. But we made a strong impulsive move to the downside. Wouldn't be surprised if we get some level of a pullback, but we do know that the geometric potential take profit for this structure is going to be around the 96 zone, which is in confluence with the previous level of support, which is going to be probably we're going to get our next level of sensitivity, next level of potential buy pressure to be put into the market. So that's going to be DXY. We're now going to look at the SPX, which is the S&P 500, and then we'll quickly look at some questions within TikTok and YouTube. But we're going to also go look at the SPX before we jump into the comments. And then also a little bit of NASDAQ, because NASDAQ broke to new highs, which is pretty significant. All right, so the S&P 500 had a massive wick down. This is the 4-hour. Let's go to jump into the daily. We've been in the trading range with the support being around 3,100, 3,075. We see it was a previous resistance, and then it turned into a nice new level of support being validated multiple times. And we also see this resistance. So currently the price is in a consolidation, resting on top of the $3,100 zone and sitting below the 3,150-ish level of resistance. On the daily chart, we got a strong bullish candle to close yesterday, and then today we are getting a strong bullish candle which got a major push to the downside initially in the overnight session in the futures, but the bulls were able to push it right back up, and there was enough buy volume to actually bring it above the open of the candle. So in terms of just technical candle structures, this is looking pretty bullish. If we get the candle to close right at the top or near the top of the range of the daily candle, that's an extremely bullish sign. We're not getting tremendous buy volume to come into the market yet, but overall, in terms of the candles, it does look more bullish. So when we go to the 6-hour into the smaller time frames, we can really easily identify the consolidation that we're seeing right here, where we have a previous resistance from this ascending triangle turned to a resistance yet again, and then now it's going to be our strong level of support. We got that huge dump that we got on Thursday, and then we got a rally up, and then yesterday night we got that big sell-off that took the price right to the support zone, got bought back right back at the open on the 6-hour, and then we're now slowly trending up, hitting our resistance zone, looking pretty strong. We are decreasing in overall volume, so we're constricting in volume. We're probably going to get a big move, and we are slowly kind of grinding up to the support zone, but we'll see where it goes. It does look like a grind as we look on the 1-hour chart here. I'm looking at a different monitor. So on the 4-hour chart, we see that big wick to the downside. pretty good to see, but we're seeing it slowly grind, right? Or it's just slowly going. And then if we just go to the 1 hour, I can see it a lot more clearly. So we're getting this slow grinding motion. So if we go and just draw some trend lines, we get our initial series of higher lows, halt on the 3150 zone, push to the downside. We see the same situation occur where you get the same level of resistance, reject this key zone, and then you get a sell-off after breaking a nice level of support. We can probably go like that just to make it a little bit more clear. And now we're getting our third attempt from the buyers. And this 3156 zone is getting attempted for the third time to get broken. And if it doesn't break, I think we're going to get a sell-off, because that's going to be quite a bit of confidence loss from the buyers, in my personal belief. Because we attempted not once, well, you could count this as two, but I'm going to count this as one because we're still getting a series of higher lows. So we get a rejection, but buyers are able to hold it, and then they fail to hold the series of higher lows, and then you get a puke from the buyers, and then you get another support bounce. You get a second attempt, slow run up, and then the buyers could not hold the series of higher lows. You get another puke. Buyers were coming in the support zone, but I think at this time, if we're not able to break above, we're going to get some level of sell-off back to the support, and it's just a matter of if we're able to hold this yet again for the third time, or if we're going to fall and let's go on the daily, come back to our zone of potential confluence. If we break the 3075-ish zone, I think the next zone that we need to hold for the buyers is going to be around the 2975-ish range. So we'll see how it goes. This last push is pretty important for the buyers if we're going to break it or not, because if we don't break it, I think 3 times failing to break a high is a lot of sell pressure that is going to get taken out of the market. Or a lot of buy pressure that's going to get taken out of the market, where we're going to get some indication, I think, if we get an initiation of momentum, that there's going to be sellers coming into the market, buyers are going to exit, and I think that's going to be the risk-off sentiment that we're looking for. But as of now, it does look like it is gaining momentum. We don't want to create a bias too early. If it does break the resistance and make a higher high, that's definitely going to indicate a risk-on environment. And then if you accompany that with the overall analysis of the DXY, where we see the US dollar weakening, that makes sense in an overall risk-on sentiment environment in which you're looking for more speculative investments to do better. All right, so we're now going to go into the questions here. So we're going to do timestamps as well, but we're going to quickly look at the TikTok and YouTube questions, and then we're going to jump into some of the other indexes that we normally look at, like the Russell 2000, the VIX. We're going to look at oil, bonds, and crypto, but let's first look at a few questions. Isham, hey Keith, it's Grinder for real. I made it. Glad you can make it. Appreciate you coming. No questions from me, but great analysis and streaming. Thank you very much. Appreciate it greatly. Thank you for coming. It's always a pleasure. And yeah, it's been a while. Good to see you on the other Discord. I don't really hop on other Discords, but that one's pretty cool in that everyone's striving for something. It's business-based. It's entrepreneurship-based. Seems like a really good group of individuals for sure. All right, so NIG. I'm not really looking at any individual stock. I'm looking at indexes. So indexes are a bundle of stocks in one index. And basically, you can buy that one index to instantly diversify into whatever composite that index is comprised of. So I'm mainly looking at the S&P, which is the 500 largest companies in the United States, and then we'll also look at the Russell 2000, which is an index or basically an index of small caps. And then you can look at some things like the NASDAQ. You can look at the Dow. There's a bunch of different indexes, but I'm not really looking at individual stocks at this moment. It's always a pleasure to listen to your TikTok podcasts. like lives. Podcast like lives. Okay, thank you very much. I appreciate it. Yeah, so I'd say it's like somewhat of a podcast. I try to be more regular with it. So, yeah, it's not really scripted or anything, obviously. I'm just going through the charts and basically creating a stream of consciousness of what I currently view in the markets. This isn't financial advice. This is just an opinion from one person who is immersed in the markets and absolutely loves trying to digest information, both small scale and large scale. So thank you very much. I appreciate that greatly. Can we take a look at KO stock? What are your predictions? I'm not really looking at any individual stock, but how about at the end of the video, I'll go over any equity, any chart that we want, but I'll do it at the end of the video when the recording is complete. So I will promise you that. The overall stock market, buy, hold, or sell. As of right now, we're in a squeeze. Like we said, we are testing a 3156. I'm basically looking at the S&P to get a general understanding of either a risk on or risk off sentiment, meaning if we are in a risk off sentiment, overall global investors are seeking to park capital in safe investments that have low ROI or safe havens like gold and things that you park cash in for safe ROI would be things like the US bonds, which basically have extremely low yield, but they're guaranteed by the US government. If you trust the government, you'll trust that you'll slowly get your money back. So that's the overall analysis I'm looking for. But in terms of the short term, I do want to see 3156 broken on the 1 hour chart, where you see a candle closure breaking above it, and even a validation of that 3156 zone as a new level of support. Like we saw as an example, this is an ascending triangle. You break, you see a hold, you get a retest, not perfectly, but you're seeing candle closures hold above the zone, and the sell pressure is not able to push it back down below this previous resistance, which is now acting as a new level of support. It's a zone. It's not a perfect exact point on cents, like getting so granular. You got to look at it as a zone, but overall that's indicating, especially where you see wicks to the wicks to the downside, indicating buy pressure to bring back up. That's when you are looking for buys, and we can see this is another example where you see sell pressure keeping the price below that 29.60 zone, 1, 2, multiple rejections, and then you see a higher low hold, and then it's holding breakout. You get a retest, and once you get that retest, validation of a new support from a previous resistance, that's when you're looking for buys, when the market structure shifts. So if you're a trader, if you're an investor, you're not reactionary, you're somewhat passive, and you're looking at the larger global macro picture. If you're in currencies, if you're in equities, you're looking at the overall health of the company in 5, 7, 10-year time. Like Warren Buffett says, if he's buying a stock, if the stock market closes for 10 years, he doesn't need to worry. That's the type of mentality and psychology you need if you're an investor. But if you're a swing trader, it's somewhat reactionary, especially if you're using technical analysis. If it's squeezing towards a zone, I would say it's a little bit more bearish due to the fact that we've tried and attempted to push above this 3156 zone multiple times, and we failed, where we get slaps in the face from the sellers to the downside, where you see more sell pressure coming into the market compared to buy pressure, indicating volume distribution, and the moves to the downside are a lot more aggressive, where the moves to the upside are like crawling slowly, where like usually in markets, the sell-offs are like elevators and the run-ups or the climbs are like stairs, and it's pretty evident where you can see that right now. So if we get another push to the downside, breaking the zone of confluence, where you get a series of higher lows in line with a zone of sensitivity, like here, like if it breaks the 3136 zone to the downside and retest this previous resistance and new support for another level of resistance, that will complete a potential head and shoulders pattern. Then that would be a potential entry into a right shoulder, which would be in confluence with this ascending zone and this horizontal zone of sensitivity. That would be a pretty good situation to be looking for a potential short. If you see sell pressure, bullish engulfing candle, double tops, something that's going to indicate lots of wicks to the upside. That's going to be something that you're going to be looking for in order to look for shorts. So that's going to be my explanation to you. We will look at any chart at the end of the video. All right, what about crypto? I will be looking at crypto as well before the Q&A at the end of the video. DSE, what about crypto? Yeah, so I'd say it's range bound right now. We did break out of the descending wedge with a target of like 9,900. That's going to be a major level of supply that I think the price is really going to hesitate to go above. And then if it does go beyond that, we got 10.2 and 10.5 as key levels of resistance as well. So I think the path of least resistance for crypto is going to be to the downside to the short term, but it is positively correlated with the traditional assets like the Russell 2000, the S&P, and Dow Jones, which are risk-on assets. So if the general market does take a tumble, crypto will probably take a tumble as well, which means that you can get crypto in for a better price. I think I'm extremely bullish for BTC in the long term, but in the short term, I would be hesitant to be extremely bullish as of now because we're range bound. I would be looking for some sort of major momentum, breaking either the $8,500 zone for a key level of support, looking for continuation patterns to the downside shorting, or you would really need to see a candle closure hold above the 10.2 at the 10.5 zone on the daily chart and see some sort of small term continuation pattern before you look to long if you are looking for upside potential. So that's going to be my answer, but we will get into it a little bit later in the video. What's up, you long BTC? Investment wise, yes. In terms of trading, no. I'm just sitting out right now until I see more momentum coming into the market. What are your predictions for the rest of the year for crypto markets? So I will talk about crypto a little bit later. I don't want to get too into it. I do have some more equities, indexes mainly, and then I'm going to get into oil as well as bonds before we get into the crypto. So I will answer that question when we do get into the crypto market side of things, which is a little bit later in the video. All right. Hopefully I'm not talking too fast. I know I do talk pretty quickly overall, but that was the analysis for the S&P 500. We're now going to get into the NASDAQ, which has made all-time highs. And let's go to the 2-day chart. We can see that was the previous high before the COVID crisis, which was around 9,700. And now we're at 10.2. Strong move to the upside. And look how this looks like the BTC chart, really. Looking back from 2017 in terms of how bullish it is. Pretty crazy. So a lot of the large companies that are in the NASDAQ are going to be in the S&P 500 too. So this is like the best performers of the S&P 500 in the NASDAQ index. And let's go into a smaller time frame to actually see how it broke out. So we got a big gap up. This was the previous resistance right here. Would not be surprised if we get some level of pullback to retest this zone. But as long as we're sticking above this 10.1-ish K zone, I think that it's overall pretty bullish because the NASDAQ is basically the index that has been appreciating greater than almost any other index. Even the small caps, Russell 2000 hasn't even been close to what the NASDAQ has done. So this is the place to be if you are a bull in the United States. It has all the major tech companies, and it's been a lot more bullish compared to Dow, S&P, and really any other index. So it's doing pretty well, and overall it looks like it's in a risk on sentiment move. We could get a pullback, but overall with the dollar going down, decreasing in strength, and the stock market going up, increasing in value, it's definitely an overall risk on sentiment right now. But you got to be careful for sure. S&P is still at a pivotal point. I value the S&P's price action in terms of the overall sentiment of risk on, risk off compared to the NASDAQ. NASDAQ is just an overall understanding of where the larger market cap companies are in the S&P, from my view, but then the sentiment is going to be indicated more in the S&P compared to the NASDAQ. And then the Russell 2000 is just a good understanding of more speculative small cap companies. VIX is looking like it could break the support. If it does break the support and dwindle back down, we can see Let's get our bar pattern so we can see when it breaks levels of support, it just slowly fades off. So if it does that, that's overall a risk on sentiment. If there's decreasing volatility, there we go. When there's decreasing volatility in the markets, if we get something like this, we're probably going to get the stock market to slowly climb back up. We're probably going to be breaking the resistance, of the S&P, moving to the upside, decreasing in volatility like so. And we've seen that happen many times in the past in the VIX, obviously, where you get a massive spike and then you get a slow consolidation back to around the $10, $11 range that we've seen hold for a while, which would not be surprising as long as the stock market remains somewhat stable and we don't really see crazy moves to the downside just yet, because the VIX really only moves and spikes to the upside when you see drops in market price. Usually the VIX doesn't go up when stock prices go up. Usually it's only when it goes down. So when the VIX is going down, when we're seeing decreasing volatility, it's a risk on sentiment. It's where you want to be more bullish in things like stock markets and risk on instruments overall. So we'll see where it goes. I think the highest probable situation as of right now is going to be that sell-off that we did see, like so. And if we see something different, obviously we can act on it. If it does hold this support, that's great. But as of right now, it does look like this is going to be potentially the path of least resistance and the potential for the VIX, which would be that it's more bullish for the stock market overall. You want to see decreasing volatility overall. So that's going to be the U.S. equities. We're now going to go into the global indexes. Going to be looking at them really, really quickly. Not going to be diving into in great of detail, but UK equities actually did better. The overall currency has done better. It puked and went to the downside quite a bit, but now we are seeing the price make a higher high and hold higher lows. So overall, it is looking like it's going to the upside, which is pretty good. Risk on. Japan stock market did take a little bit of a tumble today, but it is holding, gaining back ground from its low that it had in that 6-hour time frame, which is a little bit more bullish. But overall, it's been in the consolidation since around the 16th of June. The ASX, which is the Australian stock market, is a very similar situation to Japan. It's had a little bit of a bump up from the 15th, but since the 16th, it's basically in a consolidation, not really seeing any momentum in either direction, and Canada is in basically the exact same spot. So in terms of equities, mostly they're just in consolidation, and then there's only a few real select indexes like the NASDAQ that is seeing all-time highs, that is seeing a much higher bid and much higher demand coming into that index compared to what you can see basically every other index globally. All right, so gonna get a little bit of water, and then we're gonna dive into oil and some bonds. So oil's pulling back a little bit. We do see that it's probably going to be making a new level of support. We're trying to make a new level of support. We do see that Brent did end up pushing to the upside. It was hesitating a little bit yesterday when we were making our global macro update, but it did end up really making a higher high from the previous high. So it is now invalidated the double top in both Brent and Western Texas Intermediate, which means that we could see a potential support get created, which was a previous resistance. So we'll see how it goes, but overall, if oil is going up, that's a risk on sentiment. Oil is used in transportation, production, and overall increase in oil demand is increase in activity in an economy, which is obviously risk on. Less fear, more people investing in companies, products, production to try to get more sales. And one man's income, one man's spending is another man's income. Obviously, that's good for overall GDP and gets that economic machine turning and going. In terms of bonds, it is look like it is holding. So obviously, if we're seeing plummets in yield, it means people are driving into bonds. And if we see it kind of sustain, not a lot of people are going in bonds. And if you see it going up, people actually leaving bonds. So we're getting some stabilization in the 30-year and 10-year yields for US bonds, which means that overall there's not a lot of investors driving into US bonds, which is overall a risk on sentiment. So right now it doesn't look terribly bad overall, and it looks more bullish. The main thing we're going to be looking at is the S&P to break the 3157, 3160 zone. Like we talked about in right here, 3156-ish. That's going to be the key zone that we'd like to see the price break before we really initiate our potential move to the upside for any risk on instruments that we are looking at. And if we break to the downside, we're probably going to continue this range and move back to the support zone. That would be a potential sell-off of overall stocks globally. I think crypto would be going down as well. I don't think gold would be doing much in terms of creating any correlation with the sell-off of the S&P. Although if we do get a major sell-off within the stock market, we potentially could get another liquidation event where, because there is so much digital gold out there in terms of contracts, futures, and that amount of sell pressure where you're getting liquidations due to leveraged traders using derivatives in gold, you could get another sell-off in gold in terms of the spot price, where the physical delivery of gold could cost you a lot more than the actual digital cost to buy gold, which is what happened last time. So that could still come into fruition. We don't exactly know. Obviously, it's pretty uncertain times. But in terms of the overall structure of gold, which we'll get into right now, it does look better because it did break out of its consolidation and form a higher high. It's squeezed, forming an ascending symmetrical triangle. You can kind of argue both, and then it made a strong push to the upside, and now it's retesting the previous support zone. So this is the initial look at gold. All right, so we did spot a potential ascending wedge initially last time we made a video. It did break this zone to the downside, but it held the support zone. We were not bearish or anything on gold. We were just seeing if this series of higher lows held. It did actually hold. It didn't really validate and hold this support zone, but if we go and change the structure a little bit more, and we can still see the wick low of this low is lower than the wick low of the higher low. And then the low of the previous low is still lower than that low. So overall, when we're making higher lows and we broke a key structural level of resistance, which was that 1760 zone, we see 1, 2, 3, 4 rejections, which is an extremely valid zone for an ascending triangle formation. And the series of higher lows is still valid. So I think this is a very solid breakout of an ascending triangle. If we do get a pullback, we would be looking to see less sell volume coming into the market compared to the buy volume, bringing the price above this major structural zone. But overall, gold does look bullish. In terms of potential next levels of resistances, we would be looking at that $1,790 to $1,800 zone for a key level of supply. But I think from where we currently are, if we do get a pullback validating the previous resistance as a new level of support, and we get a nice little entry on that impulse push back to the upside, when we get the initiation of shift in a momentum back in favor to the upside, that would be, in my opinion, a good structure for a high probability risk reward, as well as a win-loss situation that I would be personally taking, as long as it holds us and validates the new support with a type A or type B candle closure. So we'll see how it goes. Gold does look pretty solid. We could get into the 4-hour chart and discuss why it does look more bullish, and because we can see initially it did have a major rejection back down, but on the daily candle, we did see that it closed where the previous daily candle could not. So on the daily, we got a very strong breakout with a candle closure above the zone. We are looking for a small pullback in order to get the best possible entry we can, but in terms of the overall structure of gold, it does look bullish, with the next key structural supply zone going to be around 1790 to 1800. So that's going to be my opinion on gold. It looks pretty damn bullish. Makes sense. The U.S. Federal Reserve has printed, I believe, an increase of 12% in the monetary base, or the supply of U.S. dollars, which is, if you look at it in terms of year over year, that's a shit ton of new money being printed. So usually if there is monetary uncertainty, meaning inflation, the central banks printing too much money, gold does well. Look at the 1970s, gold did extremely well. And I think BTC will fall into that category as well. And usually if gold is in a bull market, silver is doing well as well. We do see that previous resistance turning into a new level of support. I would have really liked to see, we could possibly still get it if we get gold to kind of consolidate a little bit further and pull back like we talked about to the nice 1560 zone. Let's just get gold on the 1 hour chart. If we're able to get gold pulling back to this new level of support, that means that silver could be consolidating for a little bit as well. And then we could be constructing a awesome squeeze with a descending wedge on top of a nice structural support, where we're getting a squeeze on top of a very structurally bullish continuation pattern where we've seen, if we go into 2 hour chart, massive bullish push, we get another flag pattern, bullish push, another continuation, consolidation, and then you get a contraction and volatility, and then you get a break to the upside, and then you get a second contraction on top of the previous resistance, which is now a strong level of support and confluence with a major structural horizontal zone. That, in my opinion, a breaking out to the upside is a high probability situation where you're going to get another bull run like we've seen here, like we've caught both times here. That is going to be my opinion on silver. So it's setting up great. I think it's a little bit too early. I'd really like to see silver consolidate and slowly fall back down a little bit further. You're getting deeper into the funnel on top of the previous resistance, which is going to be a new level of support. On the 4 hour, it looks awesome if we do break above this resistance zone. I'd be a little bit saddened because then this structure wouldn't be squeezing a little bit further, but ideally, in a perfect world, I would be looking for one more touch here, come back down, one more little resistance, and then a bump up, creating a higher high. You're looking for that nice pullback, validating as a new level of support, and you're going to be looking for a stop entry above the previous high. That's going to be the entry of silver, in my opinion. So, for those of you who might have not gotten that, let's just draw it out. So we see this resistance and this support zone. And initially when we had this zone right here, I was anticipating either a move to the downside hitting this support zone, or we're going to get a break to the upside. We are reactionary, and then from this squeeze, we broke to the upside, and now we're using this previous resistance as a new level of support, which is great to see for the overall buyer sentiment, long sentiment for silver. So now we're using this previous resistance as a new level of support, and I'd ideally like to see another resistance squeeze the price deeper into this new funnel before we get our break to the upside. And what we're looking for specifically is for this descending zone to get acted as a new level of support, and we're hopefully looking for a previous level of resistance to act as a new level of support as well, and we're going to be seeing a higher high. We're looking for that higher low. So the market structure in a consolidation has been broken, so the momentum is to the upside. We're looking for the completion of the exhaustion pattern before we look for the impulsive pattern to commence. We want to be already in the trade. So that's what we're going to be looking for in terms of the entry, and then we're going to be looking for a stop entry on top of the previous high, so we're able to enter. That was poorly drawn, but we're looking to enter at the completion after the completion of the pullback, when the momentum is starting to kick back up to the upside. So that's going to be the overall structure. I really would like to see this slowly move back to the downside. If gold is going to have a pullback, it may not. That's going to be the final pullback zone right there, and it hasn't really hit it yet, so I'm going to be a little bit more patient. We'll see how it goes, but that's going to be the ideal situation for me to be looking at. And the gold and silver ratio hasn't moved much, so we're not really going to be discussing it at this point in time. So that's the overall global macro update. We went over quite a bit of stuff. And I'll just keep this on the S&P 500 because it does look like it is slowly pushing to the upside here, and we're going to go over the questions right now, and then we're also going to now be looking at the realm of crypto, looking at BTC and total to BTC Dominance, and then we'll go over any real charts that you guys would like, any equities. Just give me the ticker and I'll look at it. Not going to do any FA fundamental analysis. I'm not going to be looking at 10Ks or anything. That's just going to take too long. But I'll just be looking at the charts. Not really going to be doing anything in terms of looking at earnings reports or anything. But just looking at charts for today. Alright, so DSE, I will be going over crypto. So I will talk about crypto predictions. I do think that we're going to get more of a consolidation than people think. And we'll look at the weekly chart, looking at that large symmetrical triangle, that squeeze between the higher lows and lower highs. We'll look at that chart because if you are assuming that the consolidation will continue, the large symmetrical triangle indicates that we could have a lot more consolidation to go before we actually break out. So we gotta have that assumption that it could consolidate until it inevitably does break out, and that is when we want to be really shifting our bias. But I think that's a little bit too early to be calling at that at this point right now. Are you a trader? Because you look like one. I definitely am. Any good stocks to trade before market closes? So I am not trading equities. I do sometimes trade indexes, but I do not trade single equities. I personally do not like equities due to the fact that the gaps are pretty aggressive. You cannot manage risk. Let's say you want to risk exactly, let's say $1,000, $100, $50, $10, whatever it is, right? You can't set a specific stop loss. In futures, as long as you're not holding over the weekend, you can. In crypto, you can do it anytime, unless you're setting it too tight where you're going to get skipped because of slippage. But overall, you can manage risk extremely well when you're trading in FX, futures, crypto, because the markets trade 24/5 or 24/7 in terms of crypto. So the markets are able to provide liquidity at a certain price anytime when the market is open, and you're looking to have the market open for as long as you can to provide that liquidity. Versus a stock market where it's open only 6.5 hours a day, and the stock could go down 10% overnight, and the next morning you wake up and you're down way more than you ever thought you would be, just because you can't have any liquidity. You can't sell during closed hours. So you cannot manage risk properly. You can't, I can argue that it's impossible because you don't have liquidity when the stock market is closed. Whereas I always have liquidity when I'm trading futures, contracts for differences, CFDs are called, or Forex, or crypto. And that's mainly why I like sticking to things that are 24/5 or 24/7. Are you married? No, but I am planning to be. I have a long-term girlfriend and we're very happy, so there are plans. Fed policies are inflationary, can't keep printing money. Yes, I agree that over the long term, obviously the increase in money supply is extremely inflationary for sure, but there are some major deflationary pressures that are putting pressure on a lot of economies, not just the United States. But let's just look at, for example, the United States and Japan as two examples. So the argument is the central bank is printing a lot of currency. They're printing a shit ton. So there must be inflation, like we saw in Venezuela, Zimbabwe, the Weimar Republic, in Germany. It happens over and over and over. In France, everywhere, right? It's inevitable for fiat currencies because human beings always want to kick the can down the road and have their presidency or their term be better than the previous presidents, or solid. And the way to do that is to print value. It's great when you can print value because it brings prosperity today and takes away future prosperity. But as long as you're kicking the can down the road, all is good. And no one wants to face the facts of, holy shit, there's too much debt, we can never pay it back. Literally, dollar is debt. US dollars is debt. There's no value from it. So they're just kicking the can down the road. So it is extremely inflationary. But in the short term, before I get into the short term, yes, the US dollar will inevitably fail, for sure. Probably in our lifetimes. If you're in your 20s, I am in my mid-20s, the US dollar will inevitably fail in our lifetimes, in my opinion. But before that, there are some major deflationary pressures put on the US dollar. For one, there is the demographics of the baby boomer generation, and they're going to have a very different spending habit compared to someone who is in their peak earning career in their 40s, early 50s, late 30s, who is spending more buying the nicest vehicle, buying their dream house, purchasing nicer clothing, all that stuff, which is inherently inflationary. Whereas if you have a retired generation who is exceedingly getting older and the overall length of an average life is getting longer, so they don't know how long they're going to live, they're going to save because medical bills cost money. They don't know how long they're going to live. Right now, people live like 80, 90, 100 years, where they were saving for a 70, 80-year lifespan. So that's 20 more years of expenses that they need to pay for, and if they're not working, they got to live off what they got. So they're going to save. Their spending habits are going to change. That is inherently deflationary. There's less demand. People are going to save. Velocity drops. That's one side of it, is just demographics. Another thing is the velocity that we talked about. Savers decrease velocity. They're going to keep more currency in their bank accounts, not going to be transacting as much to buy goods and services. The velocity is another thing. That's just the rate at which currency is transacted within an economy. If that decreases, that is inherently deflationary. And with the COVID lockdown happening, this is inherently going to decrease the level of activity within an economy. Yes, there are purchases on Amazon, there are purchases online and whatnot, but overall, are you purchasing as much stuff? Are you going and shopping and being a good consumer, going to malls and stuff? Not as much. That is inflation, or that is deflationary, because it is decreasing the velocity of that currency. So that's going to raise the value or strength of the US dollar. So there are opposing battles. The inflationary side, yes, there's a lot of money printing, but the deflationary side, the demographics, as well as the decrease in velocity. One thing to touch on is Japan, because they have had more money printing than the US in terms of percentage to GDP and the balance sheet of the government versus the market cap of their stock market. In many other ratios, Japan has printed much more in terms of currency compared to the United States. But since the asset bubble burst in 1989, Japan had a major asset bubble where stocks and equities were absolutely booming through the 80s into 1989, and they had a massive pop. And what did the central bank, the BOJ Bank of Japan, do? They created a tremendous amount of stimulus packages. They had 9 different stimulus packages which tried to stimulate the economy through somewhat less powerful QE. It's not as aggressive, but they did have their somewhat level of QE. They tried to stimulate the economy, and it did not work. The more stimulus they tried to create, the less effect it had within the overall economy. And they've had a deflationary spiral since early 1990s and beyond up to this point. They've never hit those 1989 asset bubble highs in terms of the real estate or the stock market. So they've printed more money than America. The setup in terms of inflation is there. But the demographics, which is worse than the United States, they have a terrible demographic pyramid where the older generation surpasses the number of individuals compared to the working class by a greater amount than you'd like in any economy. That is creating a lot of deflationary pressure, and the velocity of currency is going down, and that is creating additional deflationary pressure. They're not getting inflation. So central banks around the world are saying, hey, Japan isn't really seeing any real inflation, so we shouldn't really see it for, let's say, 20, 30 years either. And that's dangerous. So we'll see how it goes. But yeah, that's just some things to keep in mind. It's not just central banks print money, instant inflation. There's a lot that goes into it. And we've seen through the experience dealt in Japan that a deflation for decades, even with extreme proliferation of currency, is an outcome that is a possibility. Just something to know. Let's just look here. Are you using Trend Spider? I do not know what that is. Inflation is gonna hit. Dollar will become snowflakes one day. Yeah, inevitably, but like I said, there are some things to note. But I do agree with you that inflation and hyperinflation and the debasement of currency to a point where it becomes worthless, and there's going to be a shift where there's going to be no confidence in really any currency. It's going to get to a point. It'll take a long time, but in our lifetime, I think it will happen. Paul says, Riot. That is we'll look at all the equities after, but Riot is a ticker symbol for a company that I believe mines BTC, but it's a way to gain exposure in the crypto market without actually purchasing or owning cryptos, and you can gain exposure in the equity markets. Mara, M-A-R-A, is another one. Riot is another one. There's a couple of them that are pretty good. Dash, D-A-S-H, is another one, which all are either in the mining or staking business, which basically you have a lot of crypto. You can stake, host nodes, host master nodes if you're in Dash and all that stuff. But yeah. Look at KO stock, please. Yeah, I will at the end of the video. It's actually taking a little bit longer, but we're getting more interest, which is great to see. But at the end of the video, we will go over all equities and all that stuff. I don't understand BTC mechanisms, so I don't trade it. Yeah, I think that's good. If you don't understand something, you shouldn't trade it. You should only trade or invest in things you understand. So I think that's a great way to go about making decisions, is don't really invest, trade, unless you understand what you're trading, what you're investing. Good call on your part. How can I get in touch with you virtually, says DSE. You can join our Discord. We have a Discord that's absolutely free to join, and I am on there very actively. And you can find our Discord by going to our website, performante.ca, and then you can find our Discord there. It's pretty obvious how to join. And then my name is Keith. You can message me and get in touch with me. That's not a problem. I really enjoy talking economics, global macro, investing, trading, entrepreneurship. So yeah, if you'd like to, definitely don't hesitate. Which exchange is best for crypto trading in your opinion? Probably, says Paul. I would say it depends what you're looking for, and also it depends on where you are living. US has some difficulties with finding good exchanges. If you're living in the US, I wouldn't really recommend Coinbase because it has some pretty expensive fees. Coinbase Pro is not so bad. It does have low liquidity. Binance US is not bad. It does have lower liquidity. If you are alright with using a VPN, we cannot condone using a VPN, but if you are going to use a VPN, I would say Bybit is a good option. BitMEX definitely has a lot of slippage and error issues, and they've kind of been like finicky with like liquidation, and like I don't really like them that much. I'd much rather use Bybit. They have high liquidity. It's overall great execution. I would not recommend using market orders, but if you are using market orders, overall, you don't get that much slippage. They have great UI. You can leverage, trade multiple assets. You can hold in USDT, which we've talked about isn't the best because they've had some scandals, but overall, I'd say Bybit is a good exchange if you are using derivatives. And if you're not, if you're out of the US, Binance is by far your best bet. It gives you a lot of options to margin trade, not just BTC, but a lot of different alts where you can borrow alts, sell them on the market, which means you can short a lot of different alts, Matic, Atom, smaller alts as well, so which is great. So you can go both ways. So I would say if you're not in the US, Binance and Bybit. If you're in the US, Binance US potentially, Coinbase Pro potentially, or Bybit if you're just trading on a derivative and don't mind using a VPN. All right. I don't know you very well. Can you please make short resume about you and your occupation? Happy face. Thank you very much for all the effort and precious time spent with us. Yeah, no problem. I appreciate you coming in and giving your 2 cents and being a part of our community, our engagement, and it's a two-way street for sure. So we're now going to go into
the crypto realm, but we really want to construct the risk on, risk off thesis and kind of sentiment before we jump right into crypto. And I'll actually pull up two tabs here to give a reason why we do this. It's not out of random. It's because we are looking at correlations within the market. The correlation is not just looking at a chart and saying, it looks similar. It's a mathematical formula that takes data from a certain amount of days, collects it, brings it together, and assesses how often did it go up at the same time, down at the same time, consolidate at the same time. How similar are the price movements in terms of every single movement and data piece within that time frame. So it's a lot more than just looking at a chart. And we can see if we are looking at the overall 90-day correlations between BTC, which is Bitcoin, and the S&P 500, we are dropping in overall positive correlation, but we're still correlated around 0.17 positive correlation. We were at a high of 0.3, which is pretty correlated because the highest correlation you can have is 1, and the negative 1 is the most negative correlation you can have. But overall, BTC is dropping in correlation, but still has positive correlation, although it is dropping pretty aggressively. If we zoom in here, we went from 0.3 and we're dropping pretty quickly into what it looks like to be a point just over 0.2, just under 0.2-ish positive correlation. So we are still positively correlated, so we want to know what the overall traditional markets are doing, which is moving up. So if S&P moves above the 3157 zone, that's going to be pretty bullish. We saw it reject 1, 2, 3 times, and if we're able to break above that zone, like we saw in this larger structure where we had a consolidation, we broke the resistance, retested the resistance for a new level of support, and then we held a nice continuation pattern, ascending triangle, and then we got a strong bullish push. If we break the 3157, I think we could see something similar where we get a continuation. And why is that? We're in a larger time frame expansion. If we just look at the series of higher highs, the higher heights are getting higher and higher, and the lows are getting less so. But we just hit our low, and the next potential target is going to be that higher high. And in terms of the risk on, risk off, NASDAQ hit an all-time high. Bonds are stabilizing. Oil's retesting the new level of resistance as a new level of support. Overall, it looks more bullish. In my personal belief, USD is absolutely plummeting. Like we talked about, US dollar is absolutely plummeting. So in that context, we're now going to switch this quickly to the 1-hour chart. And then we're going to jump into the realm of crypto. All right, so that's going to be my overall analysis. We are now going to be looking at the US dollar, not the US dollar, BTC. But we're going to go from the daily and draw a picture and discuss what we currently see within the market. So let's first talk about the volume. We're not seeing much volume. We did see a large bullish candle appear yesterday, which was able to push the price out of its descending wedge right here. So it's in a bullish breakout, and the anticipated target is going to be around 9,900, which is right here, which is in confluence with our previous resistance levels we've seen in the past. We see it reject here as well, and then the major zone is around 10.4 and 10.2. But overall, we know that there's a shit ton, in other words, a lot of sell pressure at this zone. So yes, we did break out of a descending wedge, which is inherently bullish. We're making strong pushes to the upside. Overall sentiment is bullish, so overall looking good. But I will be looking to basically have the next key level of supply here, meaning if I am long, if you're long, I'm going to be looking at this zone to basically close longs and reassess the market, because at this point I do not know if it's going to go further. There's a lot of heavy resistance at this zone in terms of the daily chart and the weekly chart. And also there's not a whole lot of volume coming in, which is not great to see. You are looking to see increasing buy volume coming in, not much sell volume coming in. But overall, you're seeing very, very limited amount of volume on both ends, which is not really great. we are just seeing a consolidation overall. And if we are zooming into a smaller time frame like the 4-hour, we do see that descending wedge a little bit more clear. We are using that previous resistance as a new level of support, like we talked exactly on our previous video, and it's looking pretty good. If you are looking for a potential trade possibility, I think if you are looking for bullish potential, if you have a stop loss below that zone, and if you're looking for a take profit around 9,900, continuing the momentum to the upside would be a decent opportunity, and you get a 2.3-ish risk reward trade, which is not too bad. You can't really complain. Anything over 2, I'll take, as long as it's a good structured high probability setup, but I don't even touch anything under 2 risk reward. It's just not something I'd rather do. So that's going to be the 4-hour chart. It's looking pretty good. Basically, moving towards the upside, continuation pattern. You're looking for the lows, and the $9,900 zone is going to be the next key level for the resistance for the price to hit. I don't know if it's going to go beyond that zone. I don't expect it to, because we have such a strong level of resistance. And as of right now, I'm just waiting to see the price hit that zone, and then I'll reassess the market. I do not know if it's going to break that zone. I could not tell you. I do not think it will, but obviously the market can be deceiving. It can be random at times. It can be out of the ordinary, so we don't know what's going to happen. We're just expecting in the short term for the price to continue towards the upside around the $9,900 zone. For me, that's basically what I'm going to be looking at. Not really going to be diving into a smaller time frame. We take a look at the 1-hour here. Got a nice support. We do see a previous resistance right here. It was acting as a new level of support, and then we made a higher low. We made a low, higher low, previous resistance, new level of support. Really good to see. And then we're holding the nice level of resistance here. So we could see a potential series of higher lows, which would be obviously a ascending triangle pattern, and you're looking for a potential break at around 97 if you are looking for a potential long entry with a retest. So you're looking for, let's just get our arrow and this. Ideally, that's what you're looking for, and you're looking for entrance at the stop entry above when it's breaking to the upside, and then your stop loss will be just below the previous low right here, giving some room within the key zone, and then your take profit's going to be probably somewhere around. That's how I would play a potential ascending triangle pattern if we do get one, but we'll see how it goes. It's obviously way too early to assess it. Oops, let's just bring that back on. Also, we do have a free indicator for people. It's the Performante Average Bitcoin Volume Indicator. What is it? It is the accumulation of different volume on the transactions taking place on BTC versus either USD or USDT on all the major exchanges. We're talking about Binance, Bybit, BitMEX, Kraken, OKX, Bitfinex, Coinbase, all those exchanges, all the major exchanges. You have an accumulation of those averages put into one single data set that you're able to use with a little bit more dependability because it's an average of many different exchanges instead of one exchange. Remember that if you're using any sort of VSA, volume spread analysis, where you're conducting in comparison of volume with in confluence with price action, you need to have a dependable volume source, unlike crypto, because if you're just looking at Bitfinex in terms of volume, you're not going to get the entire market. If you're trading on in equities, you have equities that only trade on, for example, the New York Stock Exchange or the NASDAQ, right? Certain exchanges. So that gives you a single data feed in which you can trust the volume. So you do have to understand the volume and where it's coming from, basically. So that's the overall structure for BTC. We're now going to look at BTC Dominance. So we try to understand BTC Dominance. It really hasn't done anything. But if it falls, if BTC Dominance goes down, overall, we're in a crypto bull market because people are only really going to be putting money in more speculative coins when the overall crypto market is trending upwards. If it's a bull market, there's fresh money coming into the crypto realm, the crypto sphere, and capital is getting funneled into more speculative, higher potential ROI investments, and people are going to be trading alts. It makes sense. You'll make more money trading alts than trading BTC if you're unleveraged, because alts generally will rise at a faster rate compared to BTC. But if you are in a bear market, capital will funnel back into BTC, because BTC will hold its ground and hold its value far greater than any other alt, other than obviously like a stable coin, but that's a totally different, you get no appreciation, obviously. But in terms of any other alt that is not a stable coin, BTC will hold its ground better than any other altcoin. So people will funnel capital back into BTC in a bear market or consolidation, and people will outflow capital from BTC into alts in a bull market. So we're in a very pivotal zone right now. If it booms and pushes to the upside, we're going to get another bearish momentum push in BTC and the overall crypto market, in my personal belief. But if we're going to get a push to the downside where we're going to break this series of high lows, that means crypto is probably going to be in a bullish momentum, and it's going to be breaking resistances, holding supports, and it's going to be looking more bullish. So this is a good overall indicator, in my view. You don't trade this, but it's a good indicator where either you should be in alts and be looking at things like Ethereum, even XRP, BNB, Link, ZEC, ADA, Cardano, looking at Atom, Matic, stuff that can appreciate quite significantly. And has liquidity. That's also the thing that you have to look into. If you're trading like $1,000, you can basically trade anything on Binance. It'll be liquid enough, basically. But if you're trading, in the tens of thousands or greater, you want to have some sort of liquidity, especially if you're going beyond that. If you're like in six figures, you basically want to be trading like BTC, Ethereum, XRP potentially, and Link has pretty good volume, but you're not going to be trading anything beyond that, just because you'll get a lot of slippage, you won't get the best execution and all that stuff. All right, so just looking at the questions here. Got 20% on my battery, that's why it stopped for a little bit on my phone. But anyways, that's going to be the crypto market update. In terms of, let's just talk about, this one person wanted to talk about end of year potential predictions. So let's go to 2021, January 4th, 2021. I don't know if it's going to break, let's say, 11.5K. I don't know if it will. I think around 10.1. Where we are right now, I would have to say. We'll see how it goes. If it does break to the upside, we're going to get a pretty big push. I'm just thinking of maybe 12 if we're going to consolidate. I would say end of 2020, we might be at like 10.5 or 11K. Maybe consolidate, drop a little bit, boom, consolidate, super tight consolidation, and then 2021 will start trending up. Yeah, I think that might be the case. I could be completely wrong, but in terms of the potential for 2020 price predictions, I would say we're not going to go exponential just yet, because I just don't think we're going to get the start of 2017, that kind of move, until 2021. So if we are looking at the previous 2017 move that occurred, like this, I do not think we're going to get something like this until 2021. But obviously, I do think we're going to get this inevitably. Kind of like that. that could be an opportunity. I think that's going to be the potential. I think we're going to get a lot more consolidation before we get the massive bull run. But in terms of what's happening in the global macro scale, obviously things could be different, because if there is a lot more money printing, especially if it comes into winter, if there's more lockdown, if more large corporations get bailed out, you will see the value of the US dollar die off, and we're already seeing that in the current market. Let's just get that into the 1 hour chart. So if it does continue, obviously we would see BTC continue, but that's going to be my overall 1 hour analysis. We will see how it goes. So that's going to be the completion of the global macro update. Thank you very much for watching. Like I said, I will post this with timestamps on YouTube in a bit, but hopefully you got something from it. Hopefully you enjoyed it. If you were entertained, engaged in any way, it'd be great if you liked the video and if you would subscribe, so we know that we should continue to make videos like this. We do post on TikTok for lives as well as YouTube, but if you are watching on TikTok, I highly recommend watching on YouTube, because you're able to see the monitor in greater detail, and you can obviously just see the overall detail of what I'm talking about a lot more. So we'll see how it goes. A lot of interesting stuff happening, but in the short term, the major key thing I'm looking to see either break either to the upside or downside is going to be S&P, either the 3157 zone or the zone of confluence, where we're breaking the series of higher lows and breaking the 3136 zone. That's going to be the main zone that if we break, I'm going to be looking for risk-off structures and trying to get exposure to the downside, where the bears are going to be winning in the overall market. That's going to be the sentiment that I'm going to have right now. But until that happens, it's looking bullish. So that's going to be my video. Thank you very much for coming. Take care, everyone. Hopefully you're having a good week so far. Don't really see anything else. All right, bye for now, and until next time.